Hi, I'm Greg with the League of Women Voters of Kansas City. Amendment 5 is a constitutional amendment proposed by the legislature. It would mandate the phase out of the state individual income tax, enable the legislature to raise state sales tax rates, and enable the legislature to subject new categories, including services, to the state sales tax. Voters should know that with Amendment 5, there are knowns and unknowns. We know that Amendment 5 would give legislators broad authority to raise sales tax rates and or broaden the sales tax base to services. We also know that it would mandate the elimination of the state individual income tax and prohibit the reimposition of the state income tax once eliminated. But Amendment 5 doesn't provide a timeline for its implementation. It doesn't give estimates for changes to the general sales tax rate that would be necessary to replace revenues lost by eliminating the state income tax. And it doesn't identify which new goods or services would be taxed to broaden the sales tax base. We know that if the state income tax is eliminated, we will need new taxes to replace lost revenue of nearly 2/3 of the Missouri budget. But we don't know which combination of sales tax rate increases or new taxes on services will be used to make up for the loss of the largest source of revenue for the Missouri budget. First, let's start off with our current situation. In the first column, Missourians now pay a 3.0% state general sales tax rate. All in, when we combine that with other state taxes and local taxes, the average Missourian pays a combined total sales tax rate of 8.415%. In the second column, we see an estimate of what the state sales tax rate would have to be if no new sales taxes were placed on services. That would raise the state general sales tax rate from 3.0% to 11.5%. All in, the average Missourian would pay a 16.915% sales tax rate when local and other sales taxes are included. In the third column, we see an estimate based on broadening the state sales tax to cover all services except health care and rent. Under that scenario, we'd need to raise the state sales tax rate from 3.0% to 6.4%. All in, the average Missourian would pay an 11.815% combined sales tax rate. What do proponents and opponents of Amendment 5 say? What about economic growth? Proponents say cutting income taxes will lead to greater economic growth and greater sales tax collections, with no risk of reduced funding for essential services. Opponents say in 2012, Kansas Governor Sam Brownback slashed income taxes with the same assertions we're hearing today. Instead, Kansas experienced sluggish job growth that lagged behind neighboring states, credit rating downgrades, devastating cuts to schools and infrastructure, and budget shortfalls. What about other states? Proponents say that Missouri needs to eliminate its income tax to compete with states like Tennessee and Texas, who have no individual income tax. Opponents say Texas taxes the extraction of natural resources, such as oil and gas, resources Missouri does not have. Tennessee relies on tourism, levying taxes on out-of-state visitors. Every year, Tennessee has 114 million out-of-state visitors, but Missouri sees just 28 million. Can new taxes on services make up for lost income tax revenue? Proponents say new taxes on digital services and monthly subscriptions will create revenue for local governments. Widening the base of services that are subject to a sales tax can offset lost revenue. Opponents say eliminating the state income tax would wipe out nearly 2/3 of the state general revenue budget. To fully replace lost income tax revenue, Missouri current general state sales tax would need to increase from 3% to 11.5%. It would increase taxes on low and middle income Missourians, while giving a massive tax break to the wealthiest. Amendment 5 would ignore constitutional taxpayer protections previously approved by the people. Want to learn more? Please see our YouTube video, Amendment 5, detailed version. Thank you for taking the time to become an informed voter.